Hello, and welcome to the Reactions COVID-19 podcast. I'm London editor Mark Richardson, and today I'm joined by CEO of Aon Securities, Paul Schultz. I asked Paul about what the market can expect to see in the amount of third-party capital deployed at the upcoming mid-year renewals.
So regarding mid-year renewals, I guess I'd make a couple of observations. One is that we've seen kind of a steadily growing increase in the amount of bond activity coming to the market since the market kind of stopped in late March. And we anticipate that that activity is going to continue throughout May, and now that we're in the month of May, and into June as well. So we see a good level of cat bond activity coming to market, and we see kind of the market stepping up to support those transactions, albeit maybe at a different price than originally contemplated, but still support those in terms of meaningful capacity. I think where we are likely to see kind of ILS capacity pull back a bit is in Florida. And so I think, as we look at collateralized reinsurance and kind of other ways the ILS market supports just the reinsurance market in general, likely that we might see a little bit of a reduction in Florida just given kind of everything that's happened. But all in all, I would say we've come out of this, certainly focused on the activity that, we typically see at this time of year. Coming out of this okay. I think ILS has proved its resiliency during this period of crisis where kind of the broader financial markets have certainly been in turmoil. I think ILS has been a relatively stable component of that market.
And in some of those areas where there is pullback, what do you think would have to change for alternative capital to return to the market, Paul?
Yeah, so I mean, obviously, what the ILS managers are focused on today is the amount of cash they have, and looking at some potential redemptions, coming out of just the broader financial markets. I'm kind of looking at how to support that, and then looking at potential inflows, and I think once again, ILS has demonstrated its non-correlation with other asset strategies. So I think one of the fundamental reasons or fundamental principles that this market was founded is that it does provide investors the opportunity to invest in an asset class that isn't correlated to the broader markets. And so I think we've demonstrated that again. And I think over time that will start to bring more capital back into the sector. And so where we are today is that it's not just the insurance market, it's not just the ILS market, but everywhere there's a focus on cash, and there's a focus on, if you will, kind of flight to quality, and in some cases remaining liquid. So that's going to impact kind of the near term in terms of when capital starts to flow back into the ILS sector. But we are hearing that ILS managers are likely to receive new inflows as we end out Q2. I think some of the contemplated redemption activity is a bit less than originally kind of feared or originally kind of considered. So it feels like from a cash position we will be better off as we head into summer than we have been, or at least feared we would be a few months ago, or at least I guess a month ago. It seems like the COVID crisis has been with us a lot longer than it has. And so I would say I think all things are shaping up positive. The near term is obviously heavily impacted by the broader financial economy and kind of what happens in the financial markets. And so that's a little bit more difficult to predict, a little bit more difficult to have a lot of confidence around timing. But it feels like ILS has demonstrated resiliency. I think it's getting the rate lift that you would expect in a time of crisis. And so all things being equal, we expect good cash to be deployed in the second half of the year.